Alright, dear students, now we are doing September December 21 past exam question, and this is the scenario number 1. You know that in the constructed response question we have two scenarios. So this is the scenario number 1 of the September December 21. And let's go to the requirement. Prepare the statement of the profit or loss for MIMS company for the year ended 31st December 2005. So you need to remember the year end, that the statement of profit or loss is relevant to the 31st December 2005 for 12 marks. And prepare the statement of the changes in equity for MIMS company for the year ended 31st December 20x5. So this is for 5 marks. And then we have the requirement number C. Prepare the following extracts from the statement of the cash flows from MIMS company for the year ended 31st December 20x5, and this is for 3 marks. So you have to prepare the statement, the cash flow from investing activities, which is using the indirect method, for example, the purchase of property, plant, equipment, purchase of intangible assets, and the receipt of grants and proceeds from the disposal of the non-current asset. And then we have the financing activities. Again, cash from the issuance of the shares, loans, repayments, dividends. So 3 marks. So it's a 20 marks question, and in the exam, because it's a computer-based exam, you will be having a spreadsheet like they have shown within the sample question. So it will be a spreadsheet in your exam which you will be using to show your answers. So prepare the statement of profit or loss. So that means you can directly put the figures within the statement of profit or loss. If there are any adjustments, for example, related to the cost of sales, you can either show in the brackets or you can do the separate working as well. But you have to make sure that you show how that figure is calculated. For example, like there's an adjustment in the cost of sale. Usually we do have in the cost of sales, because the cost of sale figure is taken from the trial balance, and then we do certain adjustments in that. So either you can make a separate working. In that case, you just need to give the reference, okay, the cost of sale figure is calculated from that working, or simply you can do within the space of the statement of profit or loss as well by using the brackets. So it's all on you how you tackle the question. Both are equally acceptable. So prepare the statement of the profit or loss and prepare the statement of the changes in equity, and then we have the statement of the cash flows. So let's go to the question. The following is an extract from the trial balance of MIMS company for the year ended 31st December 2005. Read it and see what information exactly you have within the trial balance. So you have the revenue, the sales revenue figure for the statement of profit or loss, the cost of sales, administrative expenses, distribution costs. So we know the format. We take the revenue less cost of sales, we get the gross profit, then we have the administrative expenses, then we have the distribution cost, and then we have the profit from operations or loss from operations, then we have the finance cost, investment incomes, then we get the profit before tax, and then we have the taxation, and then we get the profit or loss for the year. So deferred tax liability at 1st January 2005. So this is an opening deferred tax liability. Provision at 1st January 2005, there's a note with that, 4600. Retained earnings, again for the statement of changes in equity. Equity share capital, again for the statement of changes in equity. Then we have the intangible assets. There's a note number 6 with that. Investment property IS 40. So this is intangible asset IS 38. And this is investment property IS 40. Then you have the finance cost, investment income, and then you are having a suspense account. So suspense account means that they have made some errors. So there is a credit balance on the suspense account. So that means there are some errors within the question they have made, and we need to correct that. So this is the trial balance, and this is going to be the first step when you are dealing with the single entity financial statement question, that you are supposed to read every element within the trial balance one by one. Okay, this is revenue, this is cost of sales. Read each and everything within the trial balance. Okay, now we'll move to the additional information. So MIMS company noted that there was an error in the inventory count at 31st December 20x4. Which year we are talking about? We are talking about 31st December 20x5. So there was an error in the last year, which is known as prior period error within the IAS 10. Prior period error. And we know when there is an error, IAS 10 states that this error should be adjusted retrospectively. Now, the retrospectively means that you have to adjust the error so that it looks that it never ever occurred, never had occurred. So MIMS company noted that there was an error in the inventory count, meaning that the closing inventory balance in 20X4 the last year was overstated by 0.7. Now again, this is the basic concept. We know the formula of the cost of sales. Cost of sales is calculated as the opening inventory, and then we add the purchases in it, and then we deduct the closing inventory. So the closing inventory was overstated. So when the closing inventory is over, we know this figure is deducted. So opening inventory, add purchases, and then you deduct the closing inventory, then you get the cost of sale. So if the closing inventory was overstated, then that means the cost of sale is understated because this figure is deducted from here. So when you deduct this figure, this will reduce the cost of sale. And when the cost of sale is reduced, then the gross profit has been overstated. So with the closing inventory being overstated, the cost of sale is understated and the profit is overstated. So that means what you need to do is you need to perform the double entry, and there's no need to show this double entry in the exam. I'm just telling for your knowledge. So what we need to do is we need to adjust this thing in the retained earning because this is a last year error, so we need to adjust that in the retained earnings. Now the profit was overstated, we need to reduce the profit, so in that case we will be debiting the retained earning, and the cost of sale was understated, so we are going to credit the cost of sale figure over here. So this is the double entry: debit retained earnings and credit the cost of sales. Okay, we'll do that, and the amount is 0.7 million. That means 700. The provision relates to a court case in existence since December 20X4. MIMS company settled this case on 31st December 20X5 for 6 million. Okay, the provision relates to the court case. Let's go to the provision. And there was balance of 4600, so there was a liability recorded of 4600. So the 4600 was recorded in the liability. MIMS company settled this case for 6 million. That means their estimate was wrong. So the full amount was credited to the correctly to the cash, with the corresponding debit entry being made in the suspense account. Now basically what they need to do is they're paying the cash, so credit cash 6 million, which is the amount paid. And what they need to do is they need to debit the liability which they have recorded, the provision, by 4600, and they should debit the charge to the profit or loss, which is the difference. So it is 4600. Yes, the 4600, and they have paid 6000, so the difference is 1400. The 1400 should be now debited to the profit or loss because they recorded the less amount as provision, and now they're paying the full amount, 6,006,000. So we'll de-recognize the liability by 4600, and we will debit the remaining difference of 1400 to the profit or loss. So the error was the full amount was credited to the cash with the corresponding debit entry being made in the suspense account. That means they only passed the credit entry and there was no debit entry they have made. So this is how we need to correct it. So this should be the this is the correct entry to be made. The income tax figure in the trial balance relates to the under and over provision. Let's go and see where's the income tax. Okay, income tax is on the debit side, which represents under provision. And we know the under provision increases the current year tax charge. The current year tax is estimated to be a tax refund. So it is going to be a negative figure because it's the income 1.2 million refund. Usually the tax expense is deducted, but if it is about refunds, we add them. In addition to this, the deferred tax liability at 31st December 2005 is 8.2 million. Okay, let's go back to the trial balance and see. The opening balance was 7,700 and the closing balance is 8.2 million, 8,200. So the difference between 77 and 8,200 is 500, which is the increase in the deferred tax liability. So the increase in the deferred tax liability, which is 8.2 minus 7.7, which is 0.5. Increase in the deferred tax liability should be recorded as an expense. Okay, so yes, moving further. On 30th September 2005, MIMS company made a 1-for-4 right issue. The exercise price was 3.5 per share. The proceeds were correctly accounted for in cash with the corresponding credit entry being made in the suspense account. We know when the shares are being issued, so the entry is debit cash, credit share capital, and credit share premium. So what they have done is they have only passed the cash entry and no credit entry is being performed. So that is why there is a suspense account on the credit side. So what you can simply do is credit the share capital, credit the share premium, and the debit entry would be the suspense account, which is the reversal of the suspense account, just like we did over here in this case, the provision case. They just credited the cash and there was no debit entry. So debit entry was in the suspense account. So once you pass this entry, debit provision, debit profit or loss, the suspense account will automatically be removed and de-recognized. Okay, so how we can simply calculate that? You can see the balance is 60,000. The balance is 60,000 and $60,000 one shares. So that means the total shares are 60,000. So 60,000 multiplied by 1 by 4, because it's one share for every 4 shares. So it will give you 15,000. Now the share price is 3.50. With $1, it is going to be recorded in the share capital because the share capital is recorded at the par value. And with $2.5, which is more than the par value, it will be recorded in the share premium. So 15 into 2.5, let's just calculate that. 15,000 into 2.75. Sorry, it's 2.5. 15,000 into 2.5. 37,500. So yes. So 15,000 will be recorded in the share capital, 37,500 will be recorded in the share premium. MIMS company acquired an investment property for 20 million cash. Okay, so initial measurement at cost, and for subsequent measurement we have cost model and fair value model. On 1st January we decided to use the fair value model. Now we know in the fair value model, gain or loss goes to the profit or loss, and there is no depreciation. As the property is expected to have a 20-year useful life, depreciation was recorded on this basis. So they have done the incorrect treatment. No depreciation should be charged on the investment property which is classified at fair value model. The fair value of the property has been assessed at 22 million, but no accounting has taken place in relation to this. So basically what they should do, is they should record the difference between 20 and 22 in the profit or loss as the gain, and then now the depreciation should be removed. How much depreciation they have charged? 20 million, so 20,000 divided by 20. So basically 1,000 is the depreciation that they have charged, which needs to be removed. All depreciation is charged to the administrative expenses, so that means we need to remove the depreciation from the administrative expenses. There was no other acquisition or disposals of the non-current asset. So in this adjustment, we have two things. First, we need to reverse the depreciation charge of 1,000, and then we need to record the gain of 2 million with respect to the investment property. Then we have MIMS company incurred a number of expenses in relation to the brand and has capitalized the following cost as an intangible asset. Capitalized, okay, we need to see whether they have done it right. 1.3 cash was paid on 1st April to promote one of its major brand. So promotion is a marketing expense. Sales and promotion should be expensed out. So they have capitalized it. That means again what we need to do is we need to charge this as an expense to the profit or loss. They have capitalized it. We need to charge this to the statement of the profit or loss. And then we have 2 million cash was paid on 1st October 20x5 to acquire a brand. Okay, fine. When you acquire a brand, this is an intangible asset. MIMS company expect that the brand to have the useful life of 5 years. So that means 2000 divided by 5 to calculate the amortization. When they acquired on 1st October 20x5, what is the year end? 31st December. So that means only 3 months depreciation should be charged, which is 3 by 12. Okay, so let's do that. 2000 is the cost, divide by 5 and into 3 divide by 12 gives you 100. 100 is the amortization charge. So this 100 goes to the profit or loss, and they say all amortization should be charged to the administrative expenses. So we need to charge that to administrative expenses. And then this marketing expense, again sales and promotion. So this should be charged to the administrative expenses as well. Okay, then we have the MIMS company paid a dividend of 0.04 per share. Okay, how many shares now? We have 60,000 were initially. Then there was the share issuance, right issue of 15,000 shares. So now the total shares are 75,000. Multiply by 0.04. So let's do this as well. 75,000 into 0.04. It gives you 3,000. Now this 3,000 should be deducted from the retained earnings. And okay, per share on all existing shares, recording the dividend paid in administrative expenses. This is not the expense of the company. Dividend is the distribution of profit, so it should be deducted from the retained earnings. So that means they've charged this as an expense. Now we need to remove it from the administrative expenses. So there are so many adjustments with regards to the expenses. Many errors has been made. Now what we can do is we can simply prepare the statement of profit or loss, and we'll keep the trial balance in front of us. So we'll start with the revenue. Okay, so first of all, let's put this $000 sign over here. So revenue in the trial balance is 24,300. Okay, then we have the cost of sales, cost of goods sold, or cost of sales. Okay, cost of sales should be deducted, we know that. So press equal to sign and then minus sign. Okay, how much is the cost of sale in the trial balance? The cost of sales is 11,600, and we need to remove the over provision element from it. So then we have the adjusted cost of sales, which is 10,900. This will give us the gross profit, which is GP. Okay, so this is 13,400. Okay, underneath that we will have the administrative expenses. Admin expenses are right full in the exam. Admin expenses. Okay, now so you can do the working for administrative expenses and just give the reference of the working. So like for example, working number 1. Give the reference and do the working number 1 over here, which is admin expenses. Right full in the exam administrative expenses. All right, so we start with the one we are having in the trial balance. As per trial balance, first of all, as per trial balance, how much it is? 10,900. Okay, now let's go back to the question and see. The first adjustment was related to the provision. We need to charge 1400 to the administrative expenses in respect of the provision because it was understated. So provision 1400. Okay, then what we need to do is, yes, okay, there was no adjustment relevant to the tax and no adjustment was relevant to the right issue, and then yes, there was a depreciation adjustment, depreciation of investment property. Okay, we need to reverse it, so we'll minus 1000 from here. Okay, then we have what? Yes, then we have, yes, this 1.3 million of promotion which was capitalized. This should be expensed out, 1300. All right, then we have the amortization of brand, which is 100 expense being recorded. Okay, then the last point, the dividends, which should not be expensed out. It is a deduction from retained earning. So dividends of 3000 should be removed from here. Now this is the total of administrative expenses, 9700. So what you're going to do is press equal to minus sign and then click over here. So it's 9700. Okay, then we have the distribution cost. Go to the trial balance and see how much it is. Distribution cost is 7300. Again, it should be deducted. Okay, once we are done with all this, we'll have 3600, which is the loss from operations. And if it is positive figure, it will be profit from operations. So it's a loss from operations. Okay, then we have the finance cost. Okay, so finance cost, and there's one more important thing, like identify your exam center and see where you're going to give the exam and see what type of keyboards they're having over there, because every time, for example, if you're practicing on the laptop, the laptop keyboard is very much different from the external keyboard. So make sure you're practicing on the relevant device, because otherwise you will have the problem in practicing. So finance cost, see in the trial balance how much it is. It's 1400. So minus 1400. Okay, then we have the investment income over here. Investment income should be added. As per trial balance, it is 500. So this is 500. And then we have the gain on investment property, remember, which is the difference between this 20 million and the year-end value of 22,002,000. So just add 2000 over here. Okay, give you uh, yes, this is, so it's, sorry, it was 500, so it gives you 2500. Okay, then we can do from here profit before tax, so it's a loss before tax. Okay, then we have the taxation figure. Okay, now for the taxation you can do working number 2. Yes, working 2 of taxation. You can do in the brackets as well. It's your choice. So the current tax provision, first of all, current year tax. So in the current year tax we have the refund. So we'll take the negative figure. Negative figure over here, yes. It is tax refund of 1.2 million, so it's 1200. And then we have the under provision. Under provision increases the current year tax charge. So it is, how much it is? See in the trial balance, it is 140. And then we have the increase in the deferred tax liability because the opening is 7700, the closing is 8200. Yes. So increase in deferred tax liability, write full in the exam, don't write DTL. So it is 500. Okay, so this is the amount that should go to the profit or loss. Now this is a negative figure, represents the income, it's not an expense. So you need to add this figure over here, 560. Okay, then you will have the loss for the year because we have the negative figure, loss for the year. Which is 1940. So this is the loss for the year. Okay, this was the statement of profit or loss. Don't forget to give the heading statement of profit or loss for the year ended. So you need to write that for the year ended thing. Okay, then we have the statement of changes in equity. So statement of changes in equity, we know first of all we need to write, okay, we have the share capital. Okay, then we have the share premium because there was a premium on the new issuance of shares. There was no opening balance of the premium though. Then we have the retained earnings. Okay, so we'll start with the opening balances, or you can write balance at particular date, just write the date. So let's take the share capital balance. Opening balance was 60,000. Share premium, there was no opening balance, so just skip it. And in the retained earnings, yes, it's 43,200. Okay, first of all we need to adjust the error, prior period error, in which we discussed that retained earnings should be reduced by 700. So it was 700. Okay, then we have the restated balances. Restated balance, this 60,000. And then this amount 42,500. Okay, then we had the share issuance. Okay, now you can show over here how the share 60,000 multiply by 1 divide by 4. So it gives you 15,000 in the share capital, and 60,000 into 1 divide by 4 into 2.5, which is the premium amount, so 37,500. Okay, then we have the profit for the year. So in this case we have the loss for the year. Loss for the year, and loss for the year should be removed from the retained earning. Press equal to sign, and this 1940. Okay, then we have the dividends. Dividends paid should be deducted from the retained earnings. So press equal to sign, and 60,000 were the initial number of shares plus 15,000 were further. Okay, you need to open the brackets first of all. Apply the brackets and then multiply by what was the amount of the dividend. It was 0.04, so 0.04, and dividend should be deducted, so you can have the minus sign as well. So it minus 3,000. Okay, now we can have the closing balances of the statement of changes in equity. So yes, from here we have 60,000. We have, just a minute. Okay, so yes, 37,500, and this one, so we have 37,560. So this was the statement of changes in equity. Okay, then we have now the last, which is the statement of cash flows. Okay, so first of all we have to make the investing activities, cash flow from investing activity. Okay, first of all we know there was a purchase of brand. The purchase of brand was for how much it was? 2,000. So minus sign 2,000. And then they purchased the investment property for 20,000. Purchase of investment property of 20,000. Again, there's a negative thing. Okay, so it says there were no other acquisitions and disposal of the non-current assets. Okay, so no dividend received, no interest received, no grants received. So this is the cash flow from net cash flow from investing activities. And then we have the other one, which is the cash flow from financing activities. Okay, so first of all, cash from the issuance of shares. Cash from issuance of shares. So how much is that? We have already calculated it. Yes. So 15,000 into 3.50. So we can show that over there. Yes. So 15,000 was the number of shares, multiply by 3.50. It gives you 52,500. And then we have the dividends paid, which we have already calculated. So press minus equal to sign and over here. So it is being linked. Then we will have this cash flow from the financing activities. So this was your complete question. We did two workings only, admin expenses and taxation, and rest we have done on the face of the statement of profit or loss.